Bitcoin, often referred to as digital gold, has become a symbol of innovation and resilience in the financial world recently. We're excited to kick off a new format that delivers quick and easy to follow videos focused on technical analysis, which is perfect for investors and traders who want fast and clear insights. Stay tuned, we're going to be continuing right after the intro. Welcome back to Bloomberg Capital. My name is Patrick, and today we're diving into the latest price movements of Bitcoin, the leader of the cryptocurrencies. Before we start though, let's check out a couple of news events that have been shaping the market most recently. Let's start with Bitcoin making headlines, with major developments shaking up the market, with BlackRock, the largest asset manager in the world, introducing its first Bitcoin product in Europe. This move signals growing acceptance of cryptocurrencies in the traditional world, as institutional players are beginning to take Bitcoin much more seriously, potentially even paving the way to a wider adoption. In other news, Mt. Gox, the once dominant cryptocurrency exchange that collapsed nearly a decade ago, has been making some headlines. In a significant turn of events, the trustee handling its bankruptcy has transferred over $1 billion worth of Bitcoin. This has fueled speculation whether these funds will be liquidated, potentially influencing the markets in a very negative way. On the regulatory front, we have positive news coming from the US, where Kentucky has officially signed the Bitcoin Rights Bill into law. This legislation is designed to encourage adoption and integration of Bitcoin by ensuring crypto-friendly policies. Such moves from individual states could serve as a model for broader legislative efforts, fostering a more favorable environment for cryptocurrencies in the US. Since we're done with the news, let's try to put all of these into context. So let's start off with the Mt. Gox exchange. We do not think that this price action will be negative towards the crypto price per se, simply because it didn't have a big impact to the downside and price mainly stayed very resilient in the most recent price action actually. Now, traditional markets have been selling off, and this is why you see a very muted rally at the moment, which Bitcoin is typically known for. Additionally, the price action from the top, from the 108,000 level, has been very mild to the downside. Don't get me wrong, this is a 30% decline. However, it could have been much sharper and much more abrupt. But this hasn't been the case. The velocity of the downturn remains really muted, and it's one of the slower downturns that Bitcoin has experienced. Usually, corrections last from 20% to 35% in Bitcoin in a bull market, and so far we have seen about a 30% decline here. So this isn't something that I would consider a bear market type of price action. Much rather, I think it's a methodical move to the downside to be able to buy back in lower, as fundamentals are strengthening for Bitcoin most recently. This is why we do believe that there will be yet another rally for Bitcoin, and we should reach much higher prices than where we are currently. However, in the short term, we should see some turbulence. We have a support level at 72,000 and a resistance level at 108,000, and so far we are getting ranging price action here. It is possible that Bitcoin tests the breakout out of this 8-monthly range that happened a year ago, where it's simply a confirmation that buyers are willing to step in at the newly formed support. So therefore, it would be best if Bitcoin would come down and find support and find new buyers to actually push much higher. We have noticed in our technical review that there isn't a lot of buying in Bitcoin per se, but there is also not a lot of selling actually occurring. The way price is, in our opinion, going down is simply the leveraged effect, where simply price is collapsing on itself because there is no buyers present at the moment, but there could be at any time, and price therefore should continue to go up or down per se in a much stronger fashion. So we should increase in volatility, while we are currently not seeing a lot of it. If we get to the Elliott wave structure, this is a progression that a lot of traders choose to pursue. We would count these as waves 1, 2, 3, 4, and 5 still forming, with wave 5 still being subdivided into 5 sub-waves. So this is where we think the bull market is going to end, and so far the speculation goes that this is simply a wave 2 correction of the subdividing fifth wave. If that is the case, the fifth wave should be the longest out of these, and usually it is the 1.618 extension of the 1 to 3 waves. If that is the case, we should get a price of around 235,000. But if I extend it to the 1.618 level, you see that prices really get crazy. So in that sense, we're simply keeping 235,000 as a rough regard, with 140,000 as the next key level we want to see reached, but this is on a mathematical basis and not from a Fibonacci extension. Do always be mindful, as Fibonacci extensions don't really have to be met. They are met sometimes, and this is what most traders take for granted. However, this is not certainty, it's just a possibility. Let's go into the short-term review. So what we think on the 30-minute chart on the intraday level is basically that we are currently forming a range with a potential low in place already. This low at the 76,000 level needs to hold to confirm that the final low of this correction has already been done. What this would require would be holding above these levels, and so far Bitcoin is trying to hold this in a formation that we call a bull flag, which should result in an upward breakout. If this pattern fails, we could revisit the lows again and potentially liquidate most of these stop losses that are placed here to form yet another final higher low. This could also be a lower low if the price action is weak, and then we could launch to the upside. So in the short term, we don't think there is lots of volatility to the downside, which is very likely. But it still could be the case, as price is still ranging on a short-term basis. And therefore, this range lasting from 94,000 to 78,000 should be the actionable range. The other thing that currently makes us a little bit uncertain is the quality of the move to the upside. While Bitcoin has proven that some of the price action initially in the move could be very weak, this is still something that we do not trust, but it could result in a big pop to the upside, which then could confirm that this low has already been formed. And this is what we are waiting for our next trading signals. If you like this technical review, we would be pleased if you liked the whole video and also subscribe to our channel and turned on the bell to not miss any other of our future videos. If you think this type of analysis is something for you, then I encourage you to check out our website, where we do this on the daily. Bitcoin is covered 3 times a day by us on an intraday basis, and you will always be the first to know what is currently going on in Bitcoin in a very unbiased way. I'm Patrick with Bloomberg Capital. I wish you a good week. Until next time, goodbye.